Good evening, it's QuantTrade Edge, and I have a smattering of patterns and little surprises for you today. Please stay to the end and you'll see all of the patterns that we've been working on and see them in action, several of them which happened today. So this is a 5-minute chart of silver, and if we look at the daily chart, you'll see that what happened today is we had an inside day. We tested down and it got rejected hard back up into the range. And that's usually a pretty bullish sign if it gets rejected lower, that it wants to go higher. But that won't be confirmed until we take out yesterday's high, today's high tomorrow. And what was really interesting here is you see the green dot at the bottom. That is an anticlimax pattern. I'll see if I can link the video to the anticlimax pattern. Actually, I'll put it in the description. But it's a very clean pattern that I first heard through Galen Woods. And basically the low between these two bars, the low between these two bars is greater than the low between these two bars. The low between these two bars is greater than the low between those two bars. It shows an acceleration over 3 bars to the downside. And that's what we had here. Once you have that pattern, you're waiting for a green candle to emerge, and then you can buy the breakout of that green candle with the stop at the low. And in this case, the low was 92, so your stop would have been at 92, your entry would have been 96.5, about a 4.5 cent entry, and you got about 67 cents off of it. It would have been about a 15R. And in theory, you also had divergences coming into this pattern, which made it that much better. This low, this low, this low. I mean, this is several lows. If you were waiting for kind of a 3 pushes, this would have been one of the times that it failed. I tend to call that the 3 pushes in an FU. It basically does your 3 pushes and it just gives you one more. But that one more was climactic, as you can see by this anticlimax pattern, and that led to this violent up move. And again, how would you know to hold on to the top here? Very simple, 3 pushes again, 1, 2, 3. And the high here was 81.99, 81.60, 75.88. So this is your divergences forming over there, and it looks like these divergences are working off sideways instead of downwards, which again is kind of a bullish sign that it's consolidating at the highs. But it was a beautiful one to catch. You had to be active at 6:35 in the morning to do that. Going back to our more traditional patterns, let's look at the Nasdaq. And what happened here in the Nasdaq yesterday was we had an up bar, and taking out that low at 13,138 is what changed the trend from up bars to down bars. Yeah, we can put our GAN counter on here. But again, the rules are very simple. Maybe I'll link the GAN counting video in there as well. I need to get better at linking that stuff so people can pull it up. Because obviously when you see something play out today, that makes you want to, see exactly how that could have been predicted ahead of time. And, watching those videos will help you do that. So here, when we took out that low, and again, this is where it's more art than science, and it would have been an easy one to miss, but it's the 10-minute time frame that gave us the best entry here. When we took out this low of day, and then we took this low of day out at 1:10 a.m., and then we got this very clean ABC on the 10-minute chart. And basically, this is 131.40, this is 131.40. These were equal highs, so that's a legitimate ABC. And this low here was 110.75. This was 110. So this was also a higher low. So this is a good clean structure. And just to show you how sensitive this is, let me show you what it looked like on a 5-minute chart. On a 5-minute chart, you had an A B, C, and you could have entered here and gotten stopped out. And then you got more chop. You got down, up, up. And that was just a very messy pattern. This part of the pattern was clean, down, up. If we were on a 15-minute chart, oops, I lost the low of day. It's off of this bar, 38. On a 15-minute chart, we lost that granularity, and it was just one leg. And then by the time we had the second leg, the third leg was here. So there were plenty of opportunities to miss this. But if you did, catch it on the 10-minute time frame, oops, that's 1 minute. If you did catch it on the 10-minute time frame, then you got very close to 4 R's on it. Remove this. Your risk bar would have been this bar right here. That bar was 16 in size, so 64 below 131.60 would have been 4R. And that would have been down to here. It only got down to 65, and then it made a higher low at 68. So, you had to be nimble to catch that, and this all happened over the European session. And then we did spike up through that area. Now, something interesting that I wanted to point out, too, on the S&P chart. Somebody asked yesterday, I believe it was, or maybe the day before, on how do you know when to take a divergence, in that you could take one of the earlier dips and still get caught down. And one answer to that is 3 pushes, but in this case you got 1, 2, 3, 4 pushes, and then this double push down here. But the real answer on today on this S&P is that I had a completely different reason to approach this chart today, and that is VIX futures expire at 8 a.m. So VIX futures expired right here, and just like option expiration, VIX expiration drives certain manipulations in the market that then sometimes get reversed. It's almost like pushing the market to an extreme so that all of the derivatives that are based off of that 8 a.m. close can get settled, and then it's like a coiled spring. You've pushed it, and then boom, it pops. And basically, if you see what happened here, we had divergences forming all morning long. These are all divergences. Once we had our 8 p.m. Time, this last 15 minutes, in fact, it's a lot cleaner on a 15 minute, it's this actual bar, and you see that this bar pushed down and set a trap. And now this goes back to our 2B pattern. I've got some virus issues. Okay, so on this 2B pattern, as soon as we take out this high at 85.50, high 54.50, I'm sorry. I'm sorry. It's not that bar. It's this red bar. That's where I had that 56.50. So this red bar down to here, this red bar was the first thing that pierced the previous down bar. I'm sorry, I'm looking at the wrong time frame. Let's go back to the 5 minute. Trying to see where it was so clean. There we go. This is where it was so clean. This red bar is the one that took out the previous low, and the high of that bar was 55.25. So 55.50 would have been your entry, and that happened between 8 and 8:05 on this bar here, and that got 4R at 74. So 74. By this bar here, by 10:55, you got 4 times your return. Then if you were lucky to stay on even longer, that bar was about 475 in size. You got close to about 6R to the top there. So again, the impetus for the trade was the 8 a.m. expiration of VIX options, but then the method of the trade was the 2B pattern. And one of the nice background features was that there were divergences building into that pattern. Speaking of the 2B pattern, the British pound today, there was information out about UK's CPI, and inflation is still ravaging over there, and the thoughts are they're going to have to raise rates, whatever the news story is. Basically, here we had a push below this low. So this was at 445, and this here was around 6:30 in the morning. We had this push below, and again, this is the bar that created that push. So this becomes your risk area, and your buy comes in on the 715 to 730 bar. And for a 2B pattern, your target is technically the high of the previous swing. So in this case, this just went perfectly to that level, and that was about 2.5-ish R. And again, these all these R's pile up, and it's the same method for entry. So again, there's an impetus for a trade, there's a method for entry, and then there's a risk management in the way you take your gains, the way you trail your stops.